It's sunny. It's sunny in Vancouver.
Canada's housing market isn't just cooling, it's veering toward a deep freeze that could last well into 2026. Oxford Economics is warning of a prolonged slump driven by falling prices, strained investors, and sluggish construction starts, all worsened by trade uncertainty with the US right now. Sales activity is dragging across the country. In high priced markets like Vancouver and Toronto, prices have already dropped 8 to 10% from peak levels. Resale numbers are sitting 15% below the 5-year average. And while a 50% sales to new listings ratio technically signals a balanced market, most realtors, registered trademark, and sellers would argue it feels anything but balanced. New construction is also losing steam. Oxford projects just 225,000 housing starts in 2025, down from 245,000 this year and far below the 2021 high of 275,000. That's the lowest pace since the early pandemic days. Condos launched in recent years are still being completed, flooding the market with supply, but not enough buyers. The condo market right now is a mess, says Oxford's Tony Stillo. With prices falling, many investors could be forced to sell at a loss. Affordability remains a wall. More first time buyers are relying on family just to cover down payments. And if you're hoping rate cuts will help, don't hold your breath. Oxford says the Bank of Canada may only shave off 0.25 to 0.5%, if anything, but the biggest wildcard? Global trade. Exports are down, tariffs are looming, and Canada's GDP could shrink in the second half of 2025 if a US deal doesn't come through. Even defense and travel are being hit. So the real question is, will politics and not just real estate fundamentals decide when this market finally turns around?
Welcome to sunny in Van, where the sun always shines. Join us on this journey to find your dream home in Vancouver.